Hey, Dan Passarelli here. Well, the market had a pretty good day today. The S&P 500 closed up 1.26% as measured by the SPY, that is. And to some, that might come as a surprise. In fact, honestly, it's a little bit of a surprise to me. The market's been a little bit more aggressive the last couple of days than I would have expected. Because the question becomes, with all these interest rate hikes, even if they slow down a little bit, they're not priced in yet. So can the Fed avoid a recession? Can they pull off a miracle? Could this be an immaculate disinflation? Well, that remains to be seen. It would be pretty surprising if it is. So let's talk about the technicals first. So yesterday, the S&P 500 did close above the 50-day moving average, which I think I mentioned in my video yesterday. Definitely could expect some follow through with something like that. 1.26%, we'll see. But one of the most important technical things to look at is the high here and here. Like, this is where you're going to want to look when I hover. The high here is from yesterday was $390.65. The low today was $391.38. That's what you call a gap. And gaps are meant to be filled. And so from a technical standpoint, at some point, we would expect a pullback to trade down to fill this gap, to trade somewhere below yesterday's high of $390.65. Now, if we look at the NASDAQ, and I just like to look at NDX for that, NASDAQ 100 index. So today, that one closed over the 50-day moving average. So look, it's not unlikely from a technical standpoint that we could see some more follow through. What else is interesting from a technical standpoint is that the VIX, in a market that's up, the VIX was also up. Now, about 80% of the time, we see the market and the VIX move in an inverse relationship. We tend to see one go up and the other go down and vice versa. But today they were both up. So that becomes interesting. I've said in some previous videos that my signal for buying puts is when the VIX ends up going below 20, and it didn't give me that opportunity today when the market was higher. And so I'm going to be watching that pretty closely, going into the weekend here and including next week. Tomorrow, we've got the CPI number coming, and that is a definitive moment. That is not the Fed's main inflation indicator, but it's a really important one. So we're going to look and see what CPI comes out to be tomorrow. That's definite. Well, nothing's definite in trading, but it's extremely likely to move the market some. If it's a hotter than expected number, we're going to see a sell-off. And if it's a much cooler than expected number, we're going to see a rally. And if it's somewhere in the middle, I got a feeling that we're going to see some back and forth. I wouldn't be surprised to see some higher volume tomorrow. All that said, at the end of the day tomorrow, there's going to be some opportunities to trade earnings. There are some stocks that have earnings coming out before the open on Friday morning. That's going to be our first earnings to really watch this season. Next week, there will be some more earnings, and then it really ramps up the following week of January 23rd. And if you didn't catch our webinar last night on trading earnings, then you'll be sure to want to catch it on Thursday, and there will also be an encore on Saturday. The only way you'll be able to see that is if you go and register. And as soon as we're done talking here, a webpage is going to pop up, and that's where you register. So head there now. This is Dan Passarelli. Hope that helps. Trade smart.